Risk Finance Learning Series on building resilience in the Pacific through Sovereign Parametric Insurance from risk pools. Builds on previous VLEs conducted from 2020-22, and will explore how Pacific Island countries are insuring against climate disasters. Virtual Learning Episode 8 has 3 objectives. Firstly, to create an understanding of the unique features, functionalities, and disaster risk underpinnings of the Sovereign Parametric Insurance. And secondly, to examine the practical applications, limitations, and efficacy of Sovereign Parametric Insurance products in responding to disaster risks. And lastly, to equip the participants with knowledge and tools necessary to make informed decisions regarding selecting, implementing, and evaluating suitable disaster risk financing products that are tailored to specific disaster risk scenarios. This episode will start with a short recap of the key messages from previous virtual learning episodes, followed by a presentation on the specific topic of Sovereign Parametric Insurance. So I will now introduce Lindo Vakaloloma from the Resilience team in the Pacific Islands Forum Secretariat, and he will provide an overview of the Pacific Regional DRF Roadmap and a refresher of virtual learning episodes 1 to 7. Over to you, Lindo.
Nakawale, Petra. Good afternoon, everyone. My name is Lendua, and I work for the Pacific Islands Forum Secretariat, a member of the Resilience team. Firstly, I wish to extend Carlos Lee Morris's apologies, as he is away on duty travel and unable to join us this afternoon. So I will be stepping in just to provide an overview of the past learning episodes relating to disaster risk financing. The first information session was on the media briefing held in April 2022. The objective was to ensure that the media have a sound and consistent understanding of disaster risk financing, and also to ensure that the mainstream media are well-versed with objectives and focus of regional and national disaster risk financing initiatives and understand the enabling institutional support structure at regional and national levels, and to also enlist the support of mainstream media to strengthen outreach to the community on disaster risk financing. The first learning series was on DRF and why it matters for the Pacific. It basically covered the foundation of disaster risk financing, premised on the unsustainable and ever-increasing cost of damages and losses in the Pacific as a consequence of disasters. Hence, the need for disaster risk financing and renewed regional efforts to support Pacific Island countries with strengthened financial protection against disasters. On the learnings episode 2, the series went into specific disaster risk financing instruments, starting with anticipatory action and linking early warnings to anticipatory action, and how it changes the way to manage disasters. On the learning series 3, it focuses on absorbing the cost of disasters, risk intention instruments in the Pacific, and how countries share and how they deal with absorbing or retaining the cost of disasters. On learning series 4, it delved a bit more into the concept of risk layering, and given the previous virtual learning series was on risk retention, the specific series 4 focused on risk transfers and various risk transfer instruments. On session 5, it discussed the similarities and differences between climate finance and disaster risk financing, with the emphasis being on making the distinction between the two. On the 6th learning series, which was held in September last year, the The theme was on disaster risk financing action, which relates to a community perspective and delve into this disaster risk financing instruments that benefit from people directly at micro level parametric insurance. The recent one, which is Learning Series 7, it delved more into scaling parametric microinsurance solutions in the Pacific. And also on the recent one, which is going to be on the microinsurance. This session today, we look at the parametric insurance at the macro or sovereign level and the different products available therein. Colleagues, all these are related to the disaster risk financing roadmap and the National Disaster Risk Financing Strategy in the context of understanding contextual and residual disaster risks. Thank you.
Thank you so much, Lindua. We'll now go into the session, which is going to be like a talanoa, and we have a representative each from PICRIC, Pacific Catastrophe Risk Insurance Company, the Pacific-based risk pool, a sovereign parametric insurance policyholder, which is the government of Fiji, and a non-sovereign policyholder, which is the Vatuvara Foundation, also in Fiji. This session will be followed by a plenary Q&A, but we also invite you to use the chat function to pose your questions, and our speakers will be available to respond to your questions either in the chat or in the plenary Q&A session. So I'll now hand over to Mr. Nicholas Pondard. Nicholas is the strategic advisor and catastrophe risk modeling in the Pacific Catastrophe Risk Insurance Company. Nicholas, you may go ahead with your intervention. Thank you.
Well, thank you so much, and Bula everyone. I will try to share my screen, and so let me know when you can see it. Okay. Okay, can you see my screen?
Yes.
Okay, fantastic. Thank you so much. So yes, so Bula everyone, my name is Nicolas Pondard, and as mentioned, I'm working for PICRIC. I am a risk scientist by background, and I support all aspects associated with catastrophe risk modeling for PICRIC. So I'm going to talk to you for 7 minutes or so about how we can build resilience in the Pacific through sovereign parametric insurance from risk pools. So before we start, just key facts around what PICRIC is. So PICRIC is a development insurer, basically. So it's a non-for-profit organization, and it has been established as a captive insurance company based in the Cook Islands. So that means we belong to governments of the Pacific and trying to support the Pacific region, getting more financial protection in case of natural disaster. So the benefits of PICRIC is that we provide parametric insurance policies. They are not designed to cover all the losses that a government can sustain during a disaster, but it can provide a relatively rapid cash payout following a major disaster. So a few weeks after a disaster, it can really help providing some relief. So it really works as a form of budget support to the government that will help financing the needs post-disaster. And it can also help state-owned enterprise to face disaster losses in case of an event. So as I mentioned, PICRIC is a risk pool. So, and what's the benefit of a risk pool? And ultimately, it's around cost saving. So instead of having different entities trying to protect themselves individually, the fact that you have a team, basically a consortium, and trying to team up together to find strategies to protect yourself financially, this will help to save operating costs. It will really help reducing administrative functions. So instead of having duplications, you have only one entity looking after all of those aspects. And those costs, generally, they are reflected in premium when it comes to insurance. So the fact that you can save on those costs will reduce the premium associated with insurance, and this reduce in cost can help actually be used towards buying more coverage. So how does insurance work? So traditional insurer, it's called indemnity insurance. Generally, you have a policy holder, let's say like the government of Fiji, that is transferring its risk to an insurer, let's say PICRIC. In order to do that, the policyholder will pay the insurer a premium annually, and the insurer themselves will also approach a reinsurance market and will pay themselves a premium in order to also protect themselves against a natural disaster. So what happens? If there is a natural disaster, then the policyholder will make a claim and ask for the damage to be compensated. As a result, a loss adjuster will come, will assess the damage, and based on that damage assessment, it will provide a payout to the insured. However, so the benefit, of this traditional arrangement is that it's fairly comprehensive because it is based on damage, and it can also cover a wide range of risk, and it can be tailored towards the need of the customer. However, the limitation is that it may not be available for all the risks faced, because as I said, you need to be able to assess the damage. And so, for example, in the case of, let's say, submarine cable, it is impossible to assess the damage. And as a result, countries who have telecommunication cables offshore are not able to insure themselves and have not been able to secure insurance. So that's a major limitation of this traditional program. Also, because you need a loss adjuster to assess the damage, it takes time. It's very time consuming. And so the claim process is very complex, and the payout will definitely take several months. It could take 6 months to 18 months before the insured can hope to receive a payout. So for that reason, PICRIC is actually specializing in another type of instrument. It is called parametric insurance. So how does parametric insurance work? It is relatively the same principle as the traditional insurer, in the sense that you have a policyholder that wants to transfer its risk to an insurer. The policyholder will pay a premium in the same way, and the insurer will insure themselves towards the global market and also pay them a premium. However, the difference is that parametric insurance is not connected to the damage. So you don't need a loss adjuster. And as a result, instead, there will be an independent calculation agent that will verify the event eligibility. And the trigger will not be the level of damage experienced by the policyholder. The trigger will be the physical event itself. So for example, it could be the category of the cyclone passing in the area. So this is much faster. As a result, let's say you have a category 3 cyclone going into the insured zone, and category 3 is the trigger. Then the insurer will provide a payout to the policyholder, and similarly, the reinsurer will provide a payout to the insurer. So the benefit is that instead of waiting 6 to 18 months in order to get a payout, the payout will be faster. So it will be relatively a few weeks after the event. It could be between 10 to 20 days once the event has been completed. So this is much faster than the 6 to 18 months. It is fairly simple, and because it is simple, it's more transparent, and the claim process is more objective. And also, it can be customized to the needs and the premium availability of the insured. However, there is a major limitation. The limitation is that there may be a potential mismatch between the payout and the actual losses, because as I mentioned, the losses here are not checked. So you could still sustain damage, but maybe not get a payout if the trigger has not been met. And I'm going to explain that in a bit more detail. And also, because those products are fairly new, there is also generally an uncertainty around the price, because the market is not too familiar with those kind of products. And so they may price a little differently as they would a traditional insurance market. So that's the limitation. So now let me give you a couple of examples so that you can really understand concretely how it works and what are the benefits and limitations associated with this type of solution. So in the 1st of November 2023, so a little less than a year ago, the government of Fiji, and Munesh will be talking perhaps more about it. So the government of Fiji has purchased a tropical cyclone policy from PICRIC. And how does that work? So the principle is what we call a cat in a box policy. So if you look at the picture to the left here, you will see Fiji, various islands of Fiji. And so in discussion between the government and PICRIC, we have discussed the shape of the boxes. You know, they look like relatively blue potatoes here. And in color, you can see historical track of cyclone that crossed that box. So if a cyclone of category 3 and above crosses the box, then a payout is made. And so, for example, here you can see, let's say the horizontal, the red curve that you could see here. That is the tropical cyclone Winston in 2016, was a category 5 cyclone. So the cyclone crossed the boxes of Fiji, and because it's a category 5, it would have triggered a 100% payout. So the total cover that Fiji has purchased would be paid out based on this event. So as I mentioned, this is very simple. It's very easy to understand. If the hurricane crosses the box and the category meets the trigger, you get a payout. And so this can be relatively fast. And so 10 to 20 days after this event, the calculation agent will confirm that the policy has triggered and a payout will be made. Again, however, the limitation is that it's not connected to the damage. And so you could, for example, have, let's say, if you look at this vertical curve here, Tropical Cyclone Thomas that happened in 2010, it is also a category 5 event, but it's not crossing the circle. And because it's not crossing the circle, no payout would be made. But that does not mean that the event will not trigger any damage. It is just simply that it's not crossing the box. So in summary, it's a very simple process. It will, and because it's simple, it triggers a quick payout, but it's not a silver bullet. It is not perfect. You will get cases where there will not be any payout. So it is a good complement to other solutions when it comes to risk financing. I will give you another example. So PICRIC has also developed an innovative product for excess rainfall, so pluvial flood, basically. And again, in this case, the government of Fiji has purchased a policy in the 1st of November. And in this particular case, the payout is made based on the number of people impacted by flooding exceeding a predefined threshold. So what that means that the government of Fiji and PICRIC agree what threshold is the most relevant based on the premium available. So in that case, it was agreed that if more than 5,000 people are flooded by more than 35 centimeter water depth, so in other words, that means 5,000 people living in their home, if they've got, let's say, water up to their knees, then a payout will be made. Of course, that does not mean that if there are less people impacted, there's no damage. The flood could still trigger damage, but based on the premium available, this is what the government of Fiji found was more appropriate for their budget. Long story short, that means that those type of policy will protect for extreme events that will maybe trigger every few years, but it will not protect for every single flood that will occur every year. There needs to be a balance between what the budget can permit and what the best cover is appropriate. So again, to summarize, so how it works, this particular policy, you can see in red here in Fiji. In red is the distribution of population based on the latest census and based on the data set called WorldPop. So what it does is that each population is assigned to a grid cell, and if the flood depth exceeds 35 centimeters in that grid cell, the number of people impacted by this 35 centimeter is counted. And if there is less than 5,000 people, there's no payout made. If there is more than 5,000 people impacted, there's 10% payout made. More than 10,000, 60% payout. More than 50,000, 100% payout. So it is a very innovative product, and we learn lessons each time there is an event. But it is also very beneficial in order to provide a payout in case there is a need for relief. So this will be my last slide. In long story short, what's the value of parametric insurance versus other instruments? So in order to protect yourself against natural disasters, so you can have budgets and reserves. You can also have contingent financing, such as loans, or you can also transfer your risk to a third party. So the benefit of parametric insurance is that in the case of a major disaster, so the most extreme, as I was mentioning, not those that occur every year, but perhaps those that occur every few years, the budget and the loan are generally not large enough on their own. So parametric insurance will provide a greater level of financing. Also, because it's not a loan, the government will not have to repay will not have to repay the payout, and it will basically. So that's also very useful, to consider. So it will not. So the parametric insurance will not add to the debt burden used by a government. So as I was mentioning, it's not a silver bullet in itself. It has very strong benefits. It has very strong limitations, but it is very complementary to other solutions. And it is useful when it fits into a refinancing strategy that is comprehensive. It provides rapid payout after a disaster. So I will stop there, and I'll be very happy to clarify, of course, those products with you. Thank you so much.
Thank you so much, Nicholas. Colleagues, if you have any questions for Nicholas, he will be available to answer your questions in the plenary, but you're also welcome to post your questions in the chat. We'll now move on to the next speaker, Mr. Aho Lotopalu, who is the CEO of PICRIC. Lotu, the question that I will pose to you is, can you discuss some of the opportunities that PICRIC is exploring to further strengthen financial protection in the region? Thank you.
Petra, thank you for the questions. And I think much of the information that I wanted to share has been shared by our technical specialist, Nicholas, in terms of the mechanical and technical services that we offer to the countries. But I just wanted to add three things. One, the creation of PICRIC was premised on the idea that we are closing the gap in the market here in the Pacific. There is no parametric insurance or any institutions providing such a service to the region, besides the digital insurance that Nicholas was alluded to during his presentations. But the availability of that, so that we exist to close the gap in the market. That's the reasons why we exist. And the second one also is the accessibility of us to the country governments, in which we were established for all. For all the Pacific Island countries, in which they can access to our service. Doesn't matter whether they have resources or without any resources, because that's something that we're going to have a conversation with them in terms of the availability of the service and the accessibility of our service to the countries. And not only that, is the affordability. I mean, you may have heard from Nicholas' presentations, the demarcation between traditional insurance and us, and parametric insurance, or risk pool, on being known as risk pool in the whole world. It's the affordability of the premium, or affordability of the service that we offer to the countries. Given the fact that we are pooling everyone who are coming to us, then we are taking the risk to the international market or the reinsurers, rather than compared to a persons or any institutions or any government going directly to the reinsurance, to the market, it will be more costly, as I understood from the technical people that from the World Bank that they advise us. So for us going forward to strengthen the arrangement for our service the region, there are two things that we are currently working on. One is to make sure that we are working closely with our donors and be able to participate on, on the global stage when there's an opportunity to have a conversation on disaster risk finance, seeking Global North to give us more resources in terms of our enhancing our capital investment so that we can take more risk. Not only that, to also help countries provide them with affordable premium. At the same time, we also seeking resources from, from our current donors, which is US, UK, Japan, and Germany, to give us more resources to be used to subsidize the premium for the countries, or particularly the policy holders, the one that they opt to finance or buy a policy from us. For example, what we are giving to Fiji and other countries like Tonga, Samoa, Cook Islands, and Niue, and potentially for Papua New Guinea and also for the Marshall Islands and Vanuatu. So we are providing the service at the same time with the rate given to us by the market, but we are subsidizing their premium for those countries. It's not a 100% subsidization arrangement. It's more like a cost-sharing arrangement, which is based on a methodology that was developed to us by ODI, based in London, and also the Insure Resilient Global Partnership, also based in London. So those are the two things that we are currently exploring to strengthen the capability, the financial capability of the company, so that we can also help countries enhance their financial protections by providing immediate liquidity and also helping out in terms of their premium subsidization arrangement with us. So that's something that we are currently working on. As you can see, the company is just 7 years old. We are not very old compared to the same risk pool arrangement organization as us, the ARC, which is the Africa Risk Capacity. They're looking after this, the Africa side, and also the Caribbean and the Southeast Asia. So those are there are 4 risk pools in the world, and we are doing pretty much the same thing in the different contexts, but the same principle that we are working on. So I think it's good for the listeners and us to have a better understanding that we are not a traditional insurance. We are a risk pool parametric insurance or development insurance that we provide service which is based on the immediate transactions or immediate payout to the countries post-disaster. Currently, Petra and listeners, that we are currently working to see if we can also embrace, not just to focus on post-disaster, but we also cover some event prior disaster strike, like drought, because that's a slow-on effect event. So that's something that we are currently working on with the team, but we are currently having 4 perils policy that we already roll out to the countries: cyclone, earthquake, also the flooding, which is the excess rainfall, and drought. So we are slowly rolling out all those 2. The new ones that we just rolled out last year and currently rolling out now is the flooding, excess rainfall for flooding, and also drought. I think that's where we are now. But I think it's important to see, according to the last slide presented by Nicholas, that we are not the only solution. There are other instruments but we are not competing with them. We are not duplicating what they're doing, like what PCAP is doing in parametric space, but we are addressing a different entry point within the disaster risk finance ecosystem. So that's something that we have to understand, that there's no duplication here. We are addressing the different entry point, like the PRF, the Pacific Resilient Facility, that are currently constructed by the Forum Secretariat. They are addressing the community level. So that's something that, it always come up that it seems like this is a crowded area, or maybe we are duplicating, maybe we are competing with others. There's no competition here, and there is no silver bullet in terms of the solutions. So, and don't see PCRIC as one solution. It's good for the countries to diversify their sources, because if there's a disaster strike and post-disaster, you can be able to maximize, I mean, the countries or the policyholder can be able to maximize the return. So there's an institution that they can offer that service, closing the gap in the market. And at the same time, we will exist to also provide education to the countries in the Pacific so that they can better understand the technicality and the policy prescriptions that the Big Creek is offering the countries in the Pacific. So I'm hopeful that down the road, the service that we offer to the country, there will be a better understanding on the service that we offer, and then the countries can decide or be able to see the value additions that we are offering to within the disaster risk finance agenda or priorities. Thank you, Patrick.
Thank you so much, Lotu, and thank you as well, Nicholas, for sharing that information on the Sovereign Parametric Insurance product that PICRIC is offering to the region. It's useful to know the limitations and the opportunities that the Sovereign Parametric Insurance has, and the developments or other products that have been developed for the region for countries to consider in strengthening their financial resilience. So thank you for that. Our next speaker is Munesh Theo. Munesh is the head of the Fiscal Policy Research and Analysis Unit in the Ministry of Finance, Strategic Planning, National Development and Statistics here in the government of Fiji. Munesh, can I ask you to share details of why Fiji has considered taking insurance policy covers from PICRIC?
Thank you, Petra, for that question. Firstly, I would like to thank PICRIC for organizing this very important panel discussion. As you will note, that Fiji is highly vulnerable to climate change and climate-induced natural disasters, such as tropical cyclones, floods, and droughts. And I think we're looking at the past history, natural disasters in generally have caused extensive damage to not only public infrastructure such as roads, bridges, and jetties, but it has also damaged utilities like electricity and water infrastructure, and affected people's livelihoods, damaged personal properties, farms, and also caused loss of lives. When we look at the data from 1972 to 2023, in that 51-year period, Fiji has been hit by around 72 cyclones, of which almost are third were almost category 3 and above. And in the same period, we received, I think, we had 3 category 5 cyclones. 2 just recently, category TC Winston in 2016 and TC Yasa in 2020. And the other one was TC Hina in 1985. In the last 51 years, we have like 540 lives have been lost. And this is just directly due to natural disasters. And 44 people actually lost lives in TC Winston. So that's a very big loss in terms of loss of lives. In 2016, I'm just trying to give some background in terms of the damages caused by TC Winston. The total damages amounted to almost Fijian $1.9 billion, which is almost $1 billion US, and equivalent to 20% of Fiji's GDP. It cost the government of Fiji around 480 million Fijian dollars for rehabilitation of schools, provide assistance to people, assist people with the housing and stuff. So $480 million that was spent by government of Fiji. Apart from that, I think a lot of this electricity infrastructure was also damaged. It took almost 1 year to reconnect the last damaged power line. So it can be very costly in terms of the damages to the utility sector as well. I think one of the reasons why government of Fiji actually took up the insurance covers was, I mean, it's like generally when you look at the Pacific, you will note that the take up of insurance, I mean, like in the Pacific or in Fiji is quite low. At the household level, this could be due to affordability, and insurance for natural disasters, especially for household or property insurance, is challenging, as many people in Fiji actually live in houses that cannot even be insured because it doesn't actually meet the cyclone certification standards, and there's hardly any insurance for crops or for farmers. So I think currently the UNCDF, the Pacific Insurance Climate Adaptation Program, has successfully piloted the parametric insurance for farmers and social welfare recipients, and is in the process of scaling this parametric insurance with the assistance of Indian government. But that's something that's being done at the moment. And I think when you look at the cost side, looking at the historical events that has happened, we must acknowledge that the financial burden ultimately falls onto government to reconstruct the infrastructure, provide assistance to people. And this is something that we kind of witnessing almost every year. So in the case of Fiji, when you look at it, the most common natural disasters that we have faced is tropical cyclone and flooding. Like last month, Fiji received heavy rainfall. We had witnessed widespread flooding across the country, a lot of damages to the roads, bridges, and also to our water infrastructure. Schools had to be closed. Just last week, half of Suva was without water, as the main pipe that actually supplies raw water to one of the reservoirs was damaged. The pipe actually got washed away with the road, and this is the reason why this panel discussion had to be postponed to today. So, I think going forward, we expect losses from natural disasters to even increase in the coming years, because we have seen the frequency and severity of these natural disasters, especially in the last 5 to 7 years. And again, the problem is further compounded by the fact that looking at the socio-economic trends such as increasing urbanization, increasing informal settlements, especially settlements in low-lying and disaster-prone areas, and also rapid development along coastlines. So I think we have to actually increase add more ammunition to our disaster risk financing toolkit. And again, just want to shed some light on government finances. Like most developing countries around the world had a sharp increase in their debt levels. Fiji being one, I think Fiji's debt also rose from below 50% of GDP in fiscal year 2019 to almost 90% of GDP in 2022. And currently it's around 80% of GDP. I mean, it's like now we feel that government has very limited fiscal space, and we may not have the same firepower or maybe the fiscal power to respond to future shocks, especially associated with natural disasters. So which is why we have to look for other viable options. And I think in that sense, this parametric insurance made a lot of sense to us. And Fiji being an active member of PICRIC, Pacific Catastrophic Risk Insurance Foundation, we had access to the full suite of existing insurance products like tropical cyclone, earthquake, tsunami, and I think the rainfall product, which is a new one. So after conducting an extensive analysis of the policy options that was presented to by the PICRIC team, so government of Fiji actually opted for 2 insurance covers. For tropical cyclone, we opted for the catastrophe in a cycle, which is called CAT in a cycle, and excess rainfall. And as part of this, to purchase these 2 products, government also allocated Fijian 2.5 million, or around US 1.25 million for the insurance premium in the current budget, which is the fiscal year 23-24 national budget. Apart from that, we also received a 50% premium subsidy from PICRIC, which was actually it was facilitated by PICRIC from key donor partners. Yeah, so these are the 2 products that we had actually opted for. So the tropical cyclone cover, it provides a maximum cover of US $9 million, and the rainfall provides a maximum cover of US 3.2 million. Thank you.
Thank you so much, Munesh. It makes sense for the government of Fiji to take cover for these high frequency events which are causing a lot of damage, not only to our communities, but as well as our the government's coffers. So our last speaker is Katie Miller, who is the director of the Vatuvara Foundation. So PICRIC has partnered and has offered the first non-sovereign policy, which is focused on nature, and this is a global precedent for coral reef conservation. Fortunately, Katie is not able to join us live, but she has provided a recording of her intervention where we asked her to discuss why the Vatuvara Foundation considered the PICRIC parametric insurance policy to protect its marine resources.
Bula Vinaka, everyone. My name is Katie Miller and I run the Vatuvara Foundation. We foster conservation initiatives out to Fiji's Northern Lao group. Just want to say thank you to the organizers for allowing us the opportunity to share our work for this virtual learning series. I will be providing more information on our coral reef insurance program and innovative policy first for Fiji. The Vatuvara Foundation is a local charitable organization, and our efforts include education, awareness, species protection, restoration, and building climate resilient communities. Our work is based in the Lao group, which is focused around 5 islands in Northern Lao. We have partnered with our tourism operator, the Vatuvara Private Islands, which is an island resort based on Kaimbu Island, and its associated private islands of Vatuvara, Kanadea, and Andavadi in Northern Lao. We also work closely with the community of Yadata. We have a fantastic team, all passionate about protecting our local environment and safeguarding species. Our turtle team has been collecting important baseline sea turtle data for Fiji, and our coral team has recently expanded to form the Northern Lao Reef Brigades as part of our coral reef insurance program. Our team is prepared this cyclone season to carry out any disaster response in the islands. Together with the resort, our partnership demonstrates a sustainable model for how conservation and tourism can unite to support scientific research, community development, and environmental protection. The resort offers conscientious luxury travel with guest participation to support our sustainability efforts. Our sea turtle project has been conducted in partnership with USP and NOAA, and we've conducted sea turtle foraging and tagging surveys in the islands to determine the origins and movements of the sea turtle populations here. We've also provided training and capacity building to the community members to assess sea turtle nesting populations around these islands. Our coral restoration project was established with Yadata Youth Group, and we look after lagoon coral nurseries to restore the surrounding reef areas. We have also partnered with the Australian Institute of Marine Science, AIMS, to incorporate a new digital tool called Reef Cloud that helps to rapidly analyze coral reef imagery, which we've incorporated into our marine monitoring. We also monitor over 100 endangered giant clams in the lagoon nursery in the hope that we can help repopulate the species within our surrounding reef system. We also host, these islands host the largest terrestrial crabs, which are a protected species here in Fiji. They are considered a local delicacy, which is threatening their populations. So we are trying to protect coconut crabs by creating natural island reserves for the species to roam freely. For our Reef Resilience Initiative, it is a holistic strategy for coral reef and community resilience in Northern Lao. We, the Vatuvara Foundation, partnered with BHP, our donors, and Willis Towers Watson, and PICRIC to pilot a parametric insurance product to allow the quick initiation of reef response and community assistance in the event of a cyclone coming through these islands in northern Laos. Climate change is a global reality that is shifting the course of the planet's history forever, and our island nations are at the greatest risk. In 2016, we were hit by Category 5 Cyclone Winston with wind speeds of over 285 kilometers per hour. It was the largest cyclone recorded in the Southern Hemisphere. Winston devastated these islands, and not a single leaf was left. It was an incredibly scary time and a reality we, as Pacific Islanders, experience. We were then also impacted by Category 5 Tropical Cyclone Yasa in December 2020, and then Category 3 Tropical Cyclone Ana in February 2021. Coral reefs are the most sensitive of all ecosystems to climate change, and reefs are not often a priority in the immediate aftermath of cyclones. So through our Coral Reef Insurance Program, we are able to ensure our actions within our community can help to build resiliency to climate risks. Our Coral Reef Insurance project is supported by BHP through their Social Investment Fund. We worked with Willis Towers Watson in developing a policy best suited for the islands in Laos and the surrounding reef system. We then partnered with IHL and then selected PCRIC to administer this innovative product. We are the first non-sovereign policyholder with PCRIC and also the third coral reef insurance policy in the world. As the first ever policy for Fiji, our work will provide an important knowledge base for the potential roles, development, and application of this innovative parametric insurance product for coral reef resilience in other areas. This 5-year program has been designed to ensure resources are rapidly available for reef restoration and community support. It is a parametric cat-in-nested circles structure, and this is in place for 3 pilot sites in northern Laos. There are then 3 buffer zones around the center, Zone D, at 25 kilometers, 50 kilometers, and 75 kilometers away from the pilot sites. Payouts will then be triggered at the pre-agreed wind speed of a cyclone passing through these outlined zones. We hope that the piloting of this program will help to expand cover to more sites in the Lao group in the coming years. Preparation is essential for our activities in the islands and to ensure that they are safely carried out post-cyclone event. Before cyclone, our key activities have included proactive reef resilience, which includes strategies to proactively promote coral community resilience to help our overall marine management efforts. This can include coral restoration work, maintaining water quality, minimizing damage to reef systems, and supporting healthy fish populations. And this all contributes to increasing the reef's resiliency to storm damage. Our program ensures that the development and rollout of cyclone response protocols and emergency response plans, and the organization and provision of reef response training and equipment, and working with community members and partners to coordinate the ongoing reef restoration and then emergency response in the event of a cyclone. As part of our capacity building with community members in Yadata, we formed the Northern Lao Reef Brigades, and this is a first for Fiji. The team will undertake coral restoration work throughout the year, regular marine monitoring, and then reef rehabilitation after a cyclone event. In the event of a cyclone, a payout will be made to implement our post-cyclone response plans. And with the funds, we're able to safely respond to human safety first, emergency relief, transportation and logistics. Those will be our priority depending on how severe the cyclone is. And as soon as it's safe to get in the water, an initial damage assessment of the reef will be conducted, and urgent reef cleanup and repair activities will be carried out at our priority reef sites that we've identified. And this will be done by our trained Reef Brigade team. For the remaining year, we will continue our coral restoration activities, marine monitoring, and supporting community livelihoods. The fact that this nature-based insurance policy can fund vital reef repair activities is a benefit for nature and a benefit for island communities. By adopting sustainable practices, engaging communities, and implementing supportive policies, we can help mitigate those impacts of climate change for building greater island resiliency. Piloting of this project will lead to long-term sustainable financing for the whole Lao group against cyclones and climate change impacts. Yunaka Vakalevu for your time today, and please let us know if you have any questions. Yunaka.
Thank you very much, Katie. Colleagues, while Katie was not able to join us this afternoon, we have Philemon Mate also from the Vatuvara Foundation. He's a marine scientist, and he can answer any questions that you have specifically for them. Just mindful of the time that we have left, and I can see that there are some questions already in the chat. I might just go through these questions. Maybe the first one from Jenna Young, which is, I think, could be answered by the Nicholas or Lotu. So Jenna wants to know about the verification process and event triggers that need to be passed before payouts are made. Is there scope to speed up the release of money beyond 10 to 20 days after an event?
Sure. Thank you so much. Yes, maybe I can respond to that. So the verification process is made by an independent calculation agent. So it's somebody completely independent from us, from PCRIC, and from the customer, let's say the government of Fiji. So when it comes to the present policies that we have, so for tropical cyclone, basically the calculation agent will wait for the event to be completed, will receive wind data from the Fiji Met Service, and based on the wind based on the category of the cyclone indicated by the Fiji Met Service, will decide if there is a payout. So this takes a few days because it has to be after the event. So generally 7-10 days to do the calculation. Then with the admin process, it takes 10 to 20 days. When it comes to the excess rainfall policy, so again, here the calculation agent is independent. They're called JBA Consulting. So they have to wait for the event to be completed so that they can get a full picture. So long story short, they have to wait for the rainfall to ease, and then they can check. How they do it, they receive rainfall data from NASA, and based on the rainfall data from NASA, they will estimate if the rainfall has met the trigger. Again, this process takes a few days, so generally 7-10 days to do the calculation, then time to get a payout, 10 to 20 days. So there are solutions to speed this up, and we are trying to do that for our drought product, actually. And this is trying to move in the early action space. So that is to use models and not wait for the event to occur. For example, let's say in the case of drought, if there is a lack of rainfall for a certain duration before a drought is declared, we could design triggers that will provide a payout. And so that means that the payout could be given even before the disaster occurs. So there's no need to wait 20 days. So it could be this. So this is a way to speed things up. This is very innovative, and so of course needs to be tested, refined, and improved. But this is the way to speed payout. Thank you.
Thank you, Nicholas. Maybe a follow-on to the same question. Is it possible to share an example of the cost financial ratio of the annual premiums versus the agreed lump sum payouts?
Okay, so I guess that's me again. So yes, I mean, so again, this will depend, of course, on the level of cover that the policyholder will want. And so, of course, the bigger the cover, the bigger the payout. This will also depend on the risk taken. But I think Munes has indicated what they do for Fiji, and so perhaps we can come back to it. Generally, the order of magnitude is around 10 to 15%. So let's say, to be keep simple, so around 10%. That means if there is a cover of $1 million, the premium is around $100,000 to $150,000. So that this is when those kind of instruments are considered beneficial, and useful. If it gets much more expensive than that, then in this case, insurance may not be the solution, and it's needed, but it may be important to look for other instruments. But yeah, so around 10-15% is the right mark. Thank you.
Petra, I just wanted to add what Nikos was saying, giving Fiji, and maybe Munes can also highlight that too as an example. The current policy that we offer to Fiji in terms of the cyclones, it's pretty much somewhere, the premium we offer to them, it's 1 million plus. I think it's 1.5. Munes, correct me if I'm wrong, but you can also highlight that for a potential payout of close to 10 million US. So, but that's the price. That's the price we're giving based on what Fiji is affording, and in terms of letting us know, okay, this is the rate that we want to pay. And we take that to the market, and the market came back with the pricing. And once we agreed the pricing, and that will determine the likely payout. And the current situation that we are giving to Fiji now is $1.5 million premium subsidized by us, more than 50%. And then for a likely payout, I'm talking about likely, if the triggers are activated, there will be a payout of close to 10 million US. If you can see, is a huge amount. And that amount, if the triggers are activated, will be processed to deposit to Fiji account, the common account, within 10 days. So, and Nico alluded to earlier on. So that's why we are engaging in the earlier stage in terms of the calculation agent to do all the calculation to confirm everything. And then we validated with the government of Fiji before the transaction is going. The only delay, if there's a delay in terms of the process, if there's any extra requirement for money laundering from the banking. So that's something beyond our control. But our expectation is to make sure that the money is deposited to Fiji account within 10 days or within 14 days. Thank you. Munes?
Thank you. I think you are correct, Lotu, in terms of the premium to the cover ratio. I think we were looking at around 15%, and we are very grateful for PICRIC for facilitating the premium subsidy of almost 50%. Yeah, but when you look at the overall cover, I think we are quite comfortable in terms of the cover that we received. I mean, it's like the direct cost to government was just 1 million just for the tropical cyclone cover. Yeah. Thank you.
Thank you so much. We just have a few more questions. I'm mindful that we've gone a bit over time. There is a proposal here, if they can have further discussions. I'm assuming PICRIC to have further discussions. The governor Tuvalu, which is not affected directly by cyclones, but more by storm surges, and they would like information on some of the services and coverages that you have to offer. Another question here on products for drought, noting that countries in the Northern Pacific are going through droughts.
Yeah, Nico, you may add also, but I just wanted to respond quickly here. For Tuvalu, yes, that's something that we already discussed with the Minister of Finance when he attended the FAM last year. And that's something that we're going to follow up with them, with the two participants who attended our regional workshop around from the 6th and the 8th of February. So that's something that we're going to follow up on that. We fully understand that it's a different barrel. It's something that we have to discuss with them to fully understand the situations before we go into constructions of the policy or the product. Because that's not something, but maybe that's something is Nico can speak about, because we are dealing with storm surge or ocean surge or whatever they call it. But that's the technical side of it that Nico can say. On the drought for the, yes, we are currently having more working with the World Bank to engage more like a firm or a particular person to look into constructing or developing the policy for drought for the North countries in the Pacific, particularly Marshall Island, that we have received any indications that they are interested in that. Naul also gave us a letter to the World Bank confirming that they are interested in developing a drought. We are still waiting for FSM and PLAU. We have made some attempt to communicate with FSM, but we haven't heard from them. Most likely we'll follow up next week. Nico, can you come in on the technical side?
Yeah, absolutely. Thank you, Lotu. So on the drought, as Lotu mentioned, we've had some formal requests already to develop the product. We have completed a feasibility study for all 14 Pacific Island countries. So that means we can implement the drought solution to all countries already. And basically the triggers are twofold. As I mentioned, there is an early action trigger. So that means if a drought has not occurred yet, but there's been a lack of rainfall for a certain duration, then there's a small payout that can be done even before the drought is declared. And then there's a second trigger. If basically a drought is officially declared, then there is a bigger payout that can be made. So it's very innovative, yes, and as Lotu mentioned, so we have some formal requests already to now structure the product, and this is funded by the World Bank. The World Bank paying for that. And on the on the storm surge side, so yes, very well we see, very happy to discuss. So far, again, the trigger is actually based on the cyclone itself, so on the category, because it's the cyclone that will trigger the storm surge. There are ways to maybe make it a bit more technical, but that takes a bit more time. So of course, that's a discussion we can have with Tuvalu and try to tailor it as closely as possible to Tuvalu's need. Thank you.
I'll take two more questions from the chat. So this question is on policies of coverage for coral bleaching events. Are there any, is there possibility for such a coverage that is triggered by higher than normal sea temperature?
Nico, can you answer that?
Yeah, my apologies. Yes, I think I missed the question. Could you repeat the question?
So the question is there any policy or coverage for coral bleaching events which are triggered by higher than normal sea temperature?
So yes, so not yet. Not yet. Right now, it's only based on, but that's something we could consider and develop if this is of interest, because that's relatively easy. Measuring temperature is something that's scientifically, well done. So that's something that could be designed if needed. Thank you.
Petra, I just wanted to add also, because we also receive different interests coming from economic sectors, coming from utility sectors, in terms of their coverage. And that's something that we are looking into that. We are hoping that we'll secure some funding from the Crop Shield to finance all those policy development and product development, which is something that we believe and we strongly agree with others also who work in this space. There is no traditional insurance can offer such a service like that to all these sectors in the economy. And that's the reasons why they reach out to us. But at the same time, we need to secure resources to start working on the development of the policy, which we are hopeful that the money that we submit our proposal to the Crop Shield, which is one of the facility that was launched during the COP, the same as the loss and damage. Once we receive the fund, we'll be able to explore the landscape and what are the possible, policy and product that we're going to come up with to meet all the barriers being indicated by the countries. Thank you.
Thank you so much. I think I'll end this virtual learning episode here. I'd like to thank our panelists for availing their time. And thank you so much to our colleagues for the very healthy discussion and questions that you posed in the chat. Thank you to everyone. This episode will be shared on the Pacific Resilience Partnership YouTube page, as well as their website. If there are any unanswered questions in the chat, we'll get our panelists to address them, and we'll share them with our registered participants through email. But thank you once again for your time, and we'll see you in the next virtual learning episode. Thank you so much.
Thank you, Petra. Thank you, Nico. Thank you, Munesh.
Thanks so much, Pinaka.
Naka Petra.
Naka Petra.